This presentation is about deductibles and coinsurance. Now, deductibles and coinsurance are used by insurers to reduce their cost for insurance. By reducing frivolous claims, insurers expect to reduce their premiums. Now, deductibles are annual. Every year, deductibles have to be paid all over again. They're charged annually. Now, deductibles come as a single deductible or as a family deductible. The single deductible is the amount that's deducted when a member of the family makes a claim for the first time in that year. The family deductible is the total amount that will be deducted for the family, all members put together. So if we have a single deductible of $50 and a family deductible of $100, deductibles will be used for two persons in the family when they make a claim. First two persons who make a claim in the year. After that, there will be no more deductibles. So the single deductible is the amount that is deducted when a member makes a claim, and the family deductible is the maximum amount that will be deducted for that family. The coinsurance is the percentage of the claim that will be paid out by the insurer. So let's work with some example to understand this concepts. Let's assume there's a plan with a single deductible of $50 and a family deductible of $150 and with a coinsurance of 80%. Let's assume a person has this plan at work and he is covered by this plan and his family is also covered. We assume there's a family, the person, his spouse, and his two children. There are 4 people in the family. So let's assume the first claim of the year is for $200 and it's for their oldest child, Tom. When this claim is submitted to the insurer is going to take off a deductible because this is the first claim made during the year and by Tom. So for Tom, they deduct the single deductible of $50, leaving $150 behind. And of this $150, the insurer pays the coinsurance amount, that's 80%. Therefore, the insurer will reimburse $120 against the claim of $200. Now, let's look at the status of deductibles. After this claim, the deductibles totally used so far is $50. So the deductible remaining is $100 because the family deductible is $150, of which 50 has been used. Let's proceed further and assume that the second claim of the year is for $300, again for Tom. When the claim is submitted for Tom, there will be no deductible for this claim because for Tom, they have already deducted the single deductible of $50. So when Tom's claim is submitted, the insurer will pay the coinsurance part, that's 80%, or $240. After this claim, since deductible has not been used, it still remains the same. $50 used, $100 of deductibles remain. Let's assume that the third claim for the year is for John, the primary member, the father. His claim is for $200. Now, because this is the first claim of John for this year, they will take off the single deductible of $50. So 150 times 80%, they will reimburse him $120 for this claim. So deductible status after this claim is, deductible used so far is $100, 50 used for Tom and 50 for John now, so $100 used up, deductibles remaining $50. Let's assume now the fourth claim of the year is $300 for his spouse, Mary. So the claim is for $300. Mary's claim will attract a deductible of $50 because this is her first claim in the year. So that leaves 250 times 80%, she will get reimbursed $200. So deductible status after this claim, total deductible used is $150. So family deductible remaining is $0. So there'll be no more deductibles for any new member of this family who makes a claim this year. Let's assume the fifth claim of the year is for $200 for their younger child, Susan. Now this is Susan's first claim of the year. But there'll be no deductible applied because the family deductible has already been used up. So she'll get a reimbursement of 80% or $160. So it's very simple. The single deductible is taken off every time a person makes the first claim in the year until the family deductible has been used up. Once the family deductible has been used up, any additional members of the family making claim, there'll be no deductibles. That's a very simple concept. So remember, always take off any deductible before applying the coinsurance. Now, the thing is very simple, but things get a little complicated because a person may be covered by more than one plan. Now, if a person, for example, is covered in two plans, the most common example being two spouses working for two different companies having two group plans. So the entire family is covered in both the plans. Now, does it mean that they're covered in both the plans, they'll get reimbursed by both plans and get more money than they actually spent? No. The government has special rules to prevent this from happening, and it's covered under what is called the coordination of benefits rules. Now, if you're covered in more than one plan, there are certain decisions that need to be taken. Number one is which plan pays first? Who is the first pay? So to determine this, there are certain rules. The first rule is, every plan may have a coordination of benefit rule. Some plans don't have anything. They don't coordinate benefits. Now, if you're covered by a plan that does not coordinate benefit and another plan that coordinates benefit, the plan that does not coordinate benefit pays first. That's the first rule. Now, the more common situation is both the plans having coordination of benefits rules. So let's assume here that John's plan has a $50 single deductible, a $100 family deductible, and 80% coinsurance. And Mary's plan has $50 single deductible, $100 family deductible, and 100% coinsurance. Let's say the first claim of the year is for John for $300. Now, when John makes a claim, the rule is the claim goes to the plan where you're the primary member first. So John's claim will go first to John's plan. So John's plan is the first player for John's claim. So step A, that is the step I'm using to indicate the first plan's reimbursement. Step A. $300 is the claim. The deductible is single, $50, $250 left. 80% of that is reimbursed, or $200 is reimbursed by John's plan. Now, step B, you need to calculate is the out-of-pocket expense. So the out-of-pocket here, in this case, the claim is for $300. The reimbursement is $200 given by John's plan. So the balance is $100, which is the out-of-pocket. The next step is to submit the entire claim to Mary's plan. Mary's plan will calculate independently how much it would have paid had it been the only payer. So if claim was submitted to Mary's plan, the $300 claim, the deductible would have been $50 and they would have reimbursed $250. That calculation I'm putting in step C. Step C is what the second plan would have paid had it been the single payer. Now, because these plans coordinate benefits, Mary's plan will pay the lesser of what you got in step C and step B. It will pay the lesser of steps B and C. So it will pay $100, which is clearly less than $250 here. So here we have John's plan reimbursing $200 and Mary's plan reimbursing $100, and they get back their expense of $300. Let's say the second claim for the year is for Mary for $200. Now John's Now Mary's claim obviously goes first to Mary's plan. So step A is under Mary now. So Mary's claim is $200. There is a single deductible of $50 here because the total family was 100. They had used 50 earlier. The balance 50 is deducted now. So she gets reimbursed $150 by Mary's plan. So what is the out of pocket? $200 claim, $150 reimbursed. The out of pocket is $50. Go to step C, submit the claim to John's plan, the claim of $200. The deductible in this case is $50. So 80% of $150, he gets $120. John's plan will pay the lesser of step B and step C, so it pays $50. So they get $150 from Mary's plan and $50 from John's plan for a total of $200. Now the deductibles have been used up in both the plans. Let's say the third claim of the year is for their older child Tom for $300. Where will this claim go first? Now Tom is clearly a dependent on both the plans. Where does this claim go first? The rule in this case is when a claim is made for the child, it goes to the plan of the parent whose birthday falls first in the year. So in this case, we are assuming John's birthday is 10th October and Mary's birthday is the 5th of July. So clearly it goes to Mary's plan first because Mary is born on 5th July, whose birthday falls before 10th October, that is John's birthday. So claim goes to Mary, $300. Mary's plan, there's no deductible, it reimburses 100%, so it'll give back the 100%, $300. So there's no out of pocket, zero. So when if it goes to John's plan also, they are supposed to pay $240, but they'll pay the lesser of step B and C, so they would pay zero. So Mary's plan will reimburse $300 in this case. So that is how this coordination of benefits works. So in this presentation, we have seen about deductibles, coinsurance, as well as coordination of benefits. Thank you.